Jim Lebenthal. Nvidia falling below $3 trillion in market cap. It's down double-digit percentage points this week. You bought more. You've answered my question.
I did. So I bought more, 27 times forward earnings, a company that looks easily like it will grow earnings per share 50% this year. Look, we all know at some point that earnings growth rate is going to continue to drop off. But for right now, you put those two numbers together, it tells me it's a buy. I can't really explain why it was down 8%. If somebody's going to say it's the gross margin projections, fine. But that's something that I think is absolutely trivial when you've got a triple beat and a company that still is the leader in the semiconductor for AI space. So I am happily adding to it. I do want to make a qualification here. I hate making a qualification, but I've got to. The market is heavy, notwithstanding today's green tape. I mean, we can just look at the market action. It's been about 2 weeks, maybe a little less than that since we topped out. Maybe we're in a correction. I doubt we're going to get a full correction, but I think if we do, it's going to be like last August, which was over in a month.
We've gotten a correction
in the NASDAQ.
and more in the NASDAQ and, well, in the mega cap names.
Yeah.
I mean, Nvidia is off 21% from its record high of January the 7th. Alphabet's down 18% from its record high of February 4th. Microsoft down 16% from its high last July. Amazon, Meta, and Apple are all down significantly from their own record highs. You made a move too, Kev, in Nvidia today. Tell me more.
Well, yesterday at the close, Scott, we covered a quarter of the position just in case the things got a little bit more dicey today. And there was a lot of premium, as you can imagine, with the volatility. So we wrote a short-term 1 week call. It's a 123 option. We generated almost $5 of premium. So if I get taken out, I'm out at 128, and that would be great. Jim just bought it, and we still have the other 75% of the shares uncovered. But Scott, I'd be a buyer of any of these down here. Maybe not back the truck up and go all in, but if you're dollar cost averaging into positions that you really like, 10 to 20% pullbacks are the times you want to be buying.
Unless you think that the pullbacks are going to get potentially greater, Jenny. I mean, if you have a prolonged period of, if nothing else, concerns about a growth slowdown, right? Some of these stocks may have a hard time. That's why the NASDAQ may continue to have a hard time. NASDAQ's down almost 5% on the week. Over a month, it's down almost 6%.
Right.
Reflective, I think, of, in part, a growth slowdown.
Right. So I knew that you were going to come to me with like the other side of it, the negative. And I wouldn't be buying any of these here. When I look at it, here's what I see. I see, yes, they're off those big numbers from their highs, but they're really not that off that much year to date. Amazon's down 5% year to date. Apple's down 5% year to date. So they just had that huge kind of spiky, euphoric peak, but they're still up 30%, 50%, 60%. Over the last 52 weeks. And they're almost all of those top 10 Mag 7, almost all are trading at over 30 times earnings. And this goes back to growth slowing. They still have, and this is true for the S&P overall also, they still have extremely great growth ahead. S&P is still expected to grow by 13%, but the growth rate is slowing. And that's what's important. Because when the growth rate is slowing, maybe you don't want to pay 30 times. And I think in the backdrop of all this, when we think about what's really happened to the market, you know, all these earnings have come out. They're supporting 13%. The economy is still strong. We think that yields are likely to come down. Interest rates are likely to come down. So what's underpinning that? Sentiment's starting to fade. And we saw that last Friday with the Michigan confidence report, where consumer confidence report, where then the market tanked 1.5%. We saw on Tuesday the conference bureau put out their consumer confidence, and it was the lowest reading since August of 2021. When people don't feel confident, they do not want to pay 30 times for a stock. They do not want to pay 21 times for the market.
I mean, there's a difference between the consumers who are feeling less confident and the investors who are buying those stocks you're talking about. It's not all the same cohort of people necessarily.
But they're derivatives of each other. So what is the market? What do investors do? They try to look out and say, are people likely to spend at the same rate they spent last year? Are people likely to want to buy stocks at the same rate they wanted to buy stocks last year? And when people are feeling bad, they just don't spend as much. They don't spend with as much frivolity. I think it's been an interesting week where we saw the extremes, the crypto area really start to take it on the chin. And to me, that's always the canary in the coal mine. and then it trickles over. So when you see Bitcoin trade down from 100,000 to 80,000, and you see MicroStrategy trade down from 400 and change to what's it at 260, 250-ish now, that ends up trickling over. And so if something was trading at 30 times before, which is more reasonable, maybe people only want to pay 25 times in the future. So I would not be buying any of these yet. Hopefully at some point we do. The only one of the Mag 7 that we like and are starting to get interested in is Google. Alphabet, whatever we call it now, it's trading at 18 times, has decent growth ahead, but I still think there's room to go.
So I partially agree with you. I'm not as negative on the economy or the markets. That's fine, but I do think it's a long way to go. But I do think, to what you just said, you have to be selective on these stocks. Obviously, I wouldn't touch Tesla with a 10-foot pole. Okay, it's not just the valuation; it's the chart. Where the valuation is a little more forgiving, but the chart is just disastrous, is Microsoft. I have a small position. I'd like to add to it. I thought about it this morning, but I look at that chart, and that thing is heavy. That's actually negative over a one-year period, if you can believe that. Obviously, I've made my bet with Nvidia. I'm adding to it. I totally agree with you on Alphabet. I don't think, though, just painting a broad brushstroke of 30 times or earnings or more is always accurate, because if I look at Amazon, right, you know, if they turned off their R&D spend, if they turned off their expansion efforts, they'd be below 30. And that's a very attractive stock to me. I own a full position in Amazon and Alphabet. I'm underweight Apple and Microsoft, and now I'm bigger in Nvidia.